Good morning, everybody. Obviously, a lot changed in the Middle East, and there's a lot to get to, so let's get to it. So, we could rehash what happened with the attacks, and you all know me, I could get into that very easily. But I'm going to tell you a story back when I was a very young advisor. I would come into my manager's office, and I'd be all spun up about something that was going on in the world politically, Ronald Reagan or Clinton or whatever. And he'd say, Zanetti, how does that affect IBM's earnings? It was kind of a rhetorical question, but actually it made a lot of sense. All right, all this stuff happened. Does that mean IBM is going to sell fewer computers? Today you might say, does that mean Apple will sell fewer iPhones because there's a war in the Middle East? Does it mean Microsoft will sell less product because of what Israel and Iran are going through right now? I'm going to answer that question based on what happened on Friday. Yeah, it does matter. And you can tell the stock market was down a couple of percent, but oil was up almost 8%. So, what does this mean for the markets and what does it mean for you? All right. There was a little slice in all this reporting that nobody is paying much attention to, and that is the Houthis down here in Yemen. They said because of what's going on with the Israel Iran fight, they're going to re engage here in the Red Sea, where 18% of the world's energy flows either through the Suez Canal, which they said they were going to block with their missiles, or through this cut right here. It's called the Gate of Tears in Arabic. So, if you can manage to at least slow down the flow of oil here, you can send the price of oil up pretty significantly. That's not even counting over here, the other side of the Arabian Peninsula, where we've got the Persian Gulf. You see that little hook right there? That's the Strait of Hormuz. 22% of the world's energy runs through that little hook. Now, I would say the chances of that having, some blockages at this point are pretty high. And what insurance company will want to insure tankers going through these areas? So, what does that mean to you? What does it mean to your investments? What does it mean to the economy? Well, I went back and did a little bit of research. Let's go back to a couple of oil shocks that we've had in years past. So, we've got 1973, the Arab oil embargo. 9% of the world's energy, I'll say disrupted, but basically it evaporated. And prices on oil quadrupled. Those of you who are old enough to remember the gas lines back in the 70s, it was pretty disruptive. Well, then we saw this same thing again in 1979. It probably cost Jimmy Carter the election, but we had another oil shock. It was the Islamic Revolution in where? Iran, just kind of like today. And simultaneously, people forget 3 Mile Island happened that year too. We had an awful lot of energy insecurity. So we had a 6% disruption and prices tripled. Now, spring forward again. Let me check my notes here. Oh, yeah, 1990. Saddam Hussein's invasion of Kuwait. And many of you remember those apocalyptic pictures when Saddam Hussein lit all those oil fields on fire and the smoke was ascending from the desert. My gosh, like something out of the Bible. And what happened? 7% disruption and prices doubled. We're not talking about single digit percentage wise disruptions here. We could see this considerably higher. Now, what does that mean for IBM's earnings? If money's going into your gas tank, and by the way, an awful lot of the price of your food comes from energy. You've got fertilizer costs, you've got, of course, the harvesting costs, transportation costs. If food and energy prices are going like this, and inflation is going like this, you will buy fewer iPhones. I suspect there's going to be considerable pressure on stocks. The recession that we've probably kind of been waiting for will probably now accelerate as we head through the summer. But remember, wealth isn't destroyed, it moves. It's all about the flows. Are we positioned right for this? Yes. And I'm going to remind you something in closing about what Walt and I said back in December and even January of this year. We said 2025 would be the year of conflict. And for 5 months, we were wrong. I can't make the case that from January to May, it was any much different than any other year conflict wise. Then June hit, and boom, the LA riots, everything that's happened since then around the country. And now we've got this overseas thing. Your portfolios are built for conflict. That's good for you. It's going to be rough out there, but I can't control any of that. Neither can Walt. All we can do is try to do a good job for you so that you have resources to navigate your way through this. And with that, I'll turn it over to Walt.